This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Let's do it. My guest today is Fran Stranar. Fran is the founder of the Techemy Group, and he is a core contributor to Stabull Labs, which of course is a capital-efficient Web3 money market, which we'll learn all about today. Welcome to the show, Fran.
It's great to be back on, Andy. Great to be here. How are you doing?
Great to have you back on, Fran. I think it's been at least a year or two, so be fantastic to catch up with you today. I guess, just for the benefit of new listeners, please, at the top of the show, just introduce yourself. Love to hear just a little bit of your personal and professional backstory. What have you been doing since we last caught up with you? And what has led you to now move into Web3 money market with what you guys are building at Stabull?
Sure, yeah. So I guess for those that don't know my background, I've been in the Bitcoin space for over 10 years. Feel like I'm part of the furniture here. We've done a whole array of industry-led efforts, predominantly focusing on structuring transactions as advisors to many well-known projects. So, for example, we did the tokenomics for Chainlink back in the day, as well as Bancor and Salt Lending. And Techemy Capital has structured more than $600 million worth of transactions across 35 or so clients. And a couple of years ago, we saw the need for a New Zealand dollar stablecoin. And so we used the Center Circle code base that they open sourced, and we created a gold-plated way to issue safe and reliable stablecoins. And we went quickly from zero to, I think, $40 million total assets under management very quickly. And everything was going great because we had a partner that was able to offer a good interest rate, or APY, for adding liquidity. And, it was a huge incentive to take dollars out of your bank account, turn them into stablecoin tokens, and then add liquidity and earn an interest rate that was above the inflation rate. But the problem was that the third-party partner was hacked for a third time. And somebody drained, the GBP and the CNY and the Canadian dollar and all the different stablecoin pools, including ours. Our team was in a unique position to help lead the recovery effort. We managed to recover, I think it was north of 80% of all the hacked funds. It took a long time to clean up that mess. And I took the opportunity to get various stablecoin issuers into a series of workshops to say, hey, we can afford as an industry to have this kind of unreliable core infrastructure. What do we as an industry need? And it was really common sense stuff. It was actually really good. So somebody said, well, why don't we put 5% of the protocol swap fees towards an insurance pool? Why don't we prioritize, security and some other very, very helpful mechanics? So it kind of felt like back in the day, if you recall, Andy, there was VeriSign, and they were controlling a lot of the DNS space, and they had too much power, and the industry kind of didn't like the direction of certain things. So the industry came together and created ICANNs. And so I was staring at this alongside, Aditya at BNC does fantastic research. And we were looking at this research about the growth in the coming years of stablecoins in real world assets. And so I'm looking at this feedback and I'm looking at this research and I'm thinking to myself, golly whiz, this is the largest growing industry telling me exactly what they want to exist. And so I put my, founder's hat on, so to speak, and I decided that for Techemy Capital, we would incubate this core infrastructure. And it really revolves around the fact that there hasn't been a solid attempt to create something that is specific for stablecoins and real-world assets. the Curbs and the Uniswaps and the Sushi Swaps and all of those different decentralized exchanges. They're just simply not built for the asset class of foreign currencies and commodities. And so we got some quants and mathematicians, and we rewrote the concept of a automated market maker. And we created what we call the fourth generation AMM, specifically designed and branded to the largest growth sector for the next 10 years, as the real world comes on chain. So that's the kind of genesis there.
Very nice. Thank you, Fran. And, I suppose it would be good if you could maybe just explain why you see it as important. Why there's a gap in the market, I suppose, for like a DEX or an AMM that specializes in, facilitating capital efficient swaps between stable coins, right? And I think there's a particular focus, or there was at the start, certainly on non-USD stable coins. I'm sure that will change over time. But so I guess just, two questions. Why is it important for people to have that ability to seamlessly go between different stable coins, and also why the focus on non-USD?
Well, since Bitcoin was invented and adopted in the early days, the dream was always to have programmable money, frictionless, fast, instant, global, And while we would love to issue everything purely on Bitcoin, the tooling is simply moved to EVM chains for the time being. Look at the systemic risk and the bottlenecks through frankly, the unnecessary and burdensome level of compliance in the old world. It is so difficult to move your own money, right? I want to pay contractors in the UK in British pounds. It's just a pain, half the time the transactions get returned because of some intermediary bank filled out a form, a dot in the wrong place or whatever. It slows down the economy. It slows down innovation. And money should be able to seamlessly transfer, value should be able to seamlessly transfer. So look at the SWIFT system. Even the BRICS nations have built their own alternative to the SWIFT system. They represent dozens of countries now, and a huge portion of the world trade for agriculture, energy, et cetera, is already moving away from the USD and the SWIFT system. All we've done is said, well, okay, so everything's moving on chain. Why don't we have absolute finality and clearing and settlement for foreign currencies and commodities that is as frictionless as possible? So some of our investors are telling us, if you get this right, you're basically an alternative to the SWIFT network, for clearing and settlement of these assets on chain. So I think, this is what the world should have. Quick, fast, permissionless, ability to swap one asset to another. So if those contractors of mine in the UK accepted British pound stablecoins, it would be a dramatically faster, payment cycle than the legacy world. That's just one of countless use cases, really.
Yeah, and another way of describing that, so you referenced the SWIFT network, but it's another way of saying really, the global FX market or exchange market, which is, I wouldn't even want to guess how big that is, but that's yeah. So this is the DeFi crypto native version of an FX market, isn't it?
Yeah, basically, it's like we also want to attempt to democratize interest rates. I think the world is waking up to the fraud of 100-something years of central banking, and you have effectively the Federal Reserve today cut the interest rate by 50 basis points, for example. Now, what if users of the system were to vote on what the rates would be? So that's also what we're doing with Stabull, is periodically every quarter, probably starting in April or sometime there next year, users of Stabull will be the ones that actually vote to how much interest rate should go towards which trading pair.
So tell us a little bit about where Stabull is at the moment. I suppose on your product journey, I think Stabull has been live for I don't know, a year or two now, right? So
No.
how are you going in terms of, how deep are those pools getting? How used to the process are people getting in terms of being able to swap the various stable coins? And there's a token as well that is coming. That's a governance token for you guys. Just explain where Stabull Finance is at the moment, Fran.
Yeah, sure. So firstly, the company life cycle, where we're at. So you may have heard of Stabull a year ago, but we certainly weren't live for that long. We've only just come out of stealth mode effectively a couple of weeks ago. So we spent the entirety of 2023 doing research and development, talking to issuers, getting to understand the landscape, who has which tokens on which chain, who are they partnering with, which chains are they expanding to, how are neobanks kind of, circling around, and all of the rest. And arguably, now we have one of the best sets of visibility across the entire global RWA stablecoin space. That's hugely beneficial. It took us a long time to settle on the actual technology solution design, right? Because we have to incorporate technical, operational, economic considerations, and then extrapolate that out into long-term game theory, so that we can create a system that can run itself and has an equilibrium between, the interest rates, the governance voting, because we don't want to have sort of fringe cases like Curve that, I don't know if you read the news, but the original founder was liquidated through vampiric kind of attack vectors on the open markets. So we built it. We built it on Ethereum and Polygon to begin with, using developers that I've trusted and worked with for over 8 years now. The platform only does two things, just to be very clear. You go there to swap one asset to another, whether it's Swiss francs or tokenized gold or whatever, or you dust off your assets and you add liquidity to earn an interest rates. And so we went for the the QA, and then the alpha testing, and then the beta testing, because security is paramount, and so is the user experience and everything else. So we've done several rounds of polishing UX, UI, and the whole interface and the back end and everything else, and securing some absolutely critical partnerships that allow us total decentralization later. We can talk about that in a bit, how we'll become unstoppable over time. And so we're now at a stage where we effectively have a small set of pools on Polygon and Ethereum. We're signing letters of intent and agreements with various issuers and market makers to add more liquidity. We're growing our socials now that we've come out of stealth mode only like 2 weeks ago. And we're effectively preparing for a full launch around mid-November. And so we hope to see the TVL increase and the usage increase now that we're slowly coming out. But, we have some megalithic partnerships and campaigns lined up. Some already starting to activate, a very important one starting on the 1st of October. And that's going to be what's called a user acquisition campaign, where we get people to, load the app or DApp, perform a swap, add liquidity, and then they earn an airdrop points post TGE in the future. TGE will be after the public sale, which is in mid-November during the big launch. So after TGE, the platform is effectively, feature complete, because the liquidity mining program, the interest rates, the swaps, it's all there, right? So also, I guess it's important to know, the recent news was BlackRock has tens of thousands of employees and billions in revenue, and Tether has 60 or 80 staff members, and just announced they got larger revenues than BlackRock. That's the power of DeFi and Web3. Stabull doesn't need thousands of staff, or even dozens, really, to scale to billions of dollars in daily trading volume. So our objective is to become a top 10 DeFi project and expand, chain to chain, and do the various integrations. So the only thing we'll do moving forward is just integrating more chains and adding more pools. And again, it's just highly scalable that way.
Very nice, Fran. Yeah, it'd be fascinating to see, the long-awaited return of DeFi. DeFi summer 2.0, 4.0, however you want to look at it. You mentioned the pre-sale Fran. So do you want to just explain a little bit more about what that is, when it is, where people should go? It's on Gempad, I believe. Just, anything that people should know about the Stabull Finance pre-sale.
Yeah, so I spent all of 2023 and two dates this year making sure that we subscribe to non-predatory investors. Right, we don't want constant sell pressure after we launch and everything else. So every single one of our investors, in fact, the lead investor is a publicly listed company, and all of them have said, look, this either goes to zero or you become a massive unicorn, and offer an alternative to Swift and the London or the CME or something like that for commodities. And so they have good conviction. They don't want a quick flip on a project like this. They see the market positioning and the importance of this infrastructure. So we're pretty much sold out of the pre-sale. It was only 2 million, and so we have 25% left. And because we already have our strategic partners, we've decided to try and decentralize the exposure in the ethos of this whole industry by loading up on the decentralized platform called Gempad, the last allocation, and that goes live on Monday next week. You can put a timestamp in the comments under the where you post this podcast. So that's the pre, and then we'll be doing a public sale that's always been planned. Just before, actually listing the governance token and everything else. And that will probably happen in early to mid-November. And we're expecting that the Bitcoin market, after, almost 9 months of consolidation, is sort of like a beach ball underwater and should continue its grind up and bullish momentum. I think the market's just waiting for October to begin, Q4 to begin at this point, basically. So we think it'll be in a good market conditions, irrespective of the geopolitical chaos out there with the elections and everything.
Yeah, well, that'll be fascinating to watch. Of course, as we record today, in September 19, finally got that the rate cut by the Fed. September traditionally, very bearish for Bitcoin, but as you've pointed out, Fran, October, and October, November, December, just Q4 usually brings fireworks, and you're right, we are overdue fireworks just because of that, I don't know, very, very long and painful sideways consolidation that Bitcoin has done really this whole year since the launch of the ETF. So, fascinating time.
And the industry is sick of meme coins. I mean, they're fun and all the but it's so really sucked out the momentum, out of everything. Yeah. And with enough time passing, the interest wanes, and people are starting to get hungry for, infrastructure with longevity again. So we're getting some really good positive feedback from the industry about our market positioning and our product.
Yeah, very much agree. Fran, just in terms of the stablecoin pairs on Stabull Finance that are available, I suppose, both for swaps and for people that they want to lock up or add to the liquidity pools and earn a little bit of yield, what are the supported stablecoins at the moment? And anything you've got to say on what could be added in the future as well, of course?
Yeah, of course. So we have the New Zealand dollar, euros, Turkish lira, Brazilian real, and a few others that we're only just loading initial liquidity to now. So anyone could go and source the official, Turkish lira or Brazilian tokens from a different platform, bring them to Stabull and add liquidity and start earning interest rates on providing that service today. So you're going to see that grow step by step, pool by pool. Now, again, we have talked to everyone, and there is a whole smattering of products coming to the market. For those unaware, there's been easily over $1 billion invested in the last 18 months into stablecoin and real-world asset companies, and they're getting their products out of the lab and into the wild at this time, so to speak. And so they're all going to be going live not even one at a time. I talked to an issuer yesterday who's launching 35 stable coins by Christmas. And they're a neobank, so they can do it because they already have the FX and everything in the real world there. So I think this is going to be an exponential growth curve, and we're focusing on stable coins to begin with, simply because the real world assets are not prevalent right now on Polygon and Ethereum. They're experimental to an extent in private federated blockchains, or the likes of Stellar in some regards, and all the others. And also worth noting is every single layer 1 and layer 2, number one strategic priority moving forwards is stablecoins and real world assets. Nothing else is going to drive, wallet numbers, user numbers, transaction volumes on their chain like stablecoins and real world assets, or the real world coming on chain effectively.
Yeah, I very much agree. That's very well said, Fran. What about, the one, I suppose, concern that perhaps new users to DeFi have is there's this perception that sometimes obviously DeFi can be, it's not necessarily user-friendly when people first start to engage with DeFi, but as long as you know what you're doing, you can get around that. But there's also a perception that DeFi is vulnerable to various attack vectors, frauds, and rug pulls, so on and so on. What is the focus at Stabull Finance to ensure? I'm sure you're doing various audits and making sure that security is top of mind and everything is as safe as it needs to be.
Yeah, so it's a two-part question. One on sort of go-to-market or user personas, like who's using it and why, especially focusing on the new ones where DeFi is scary. Well, I mean, your millennials are already leapfrogging the conventional banking system and jumping straight to neobanks like Revolut and many others. And so if they onboard and, do all the compliance with a neobank, they don't even need to know that the neobank is actually doing the swap facility through Stabull, right? So I'm sitting there in Europe with my whatever, next generation bank solution, and I wire in some euros from my European bank account, and I want to buy gold or Swiss francs inside that provider's, interface. The user will never know that the swap could be routed through to Stabull's liquidity pools. So that's for the mass adoption that they solve. We're at the bottom of the tech stack, or the bottom of the solution, the sort of core infrastructure, if you will, providing the liquidity pools and the incentive to bring liquidity to those pools. Whereas from a security perspective, yes, those pools become giant honeypots, right? And so not only have we audited every major release as well as our governance token, and we will audit every single chain integration and pool moving forward, we have natively baked in that 5% of all transaction fees on the platform go towards an insurance pool. As I said, that was a great suggestion by the series of workshops we did almost 2 years ago now. Additionally, we have partnered with one of the, if not the most comprehensive cybersecurity experts in the Web3 space. I believe they got like a $200 million investment from the likes of Binance and others. They're called Hactra, and they created a product called OzNet, and we're about to launch a $50,000 bounty program to begin with, so that people can ethically disclose if they find any issues there. And we'll be doing pen testing and other security things on an ongoing, on a regular basis. That makes sense. So, but countering that as well a little bit is, time has passed, right? We've seen the early days of Solidity when Ethereum first came out and how clunky the interfaces and everything was. And we now have the rise of AI in cybersecurity. And so a lot of this stuff has been ironed out, like Chainlink, one of our key partnerships there, so that we can bridge our own token from Polygon and Ethereum and other places. That's coming in the next couple of months. Their contracts have been, used throughout the industry as a standard. they've done more than sufficient audits, and it's just kind of become as a core puzzle piece for other people to, use this open source, already audited, safe and battle tested code base. So things are getting easier despite the regular news of various hacks. But I do think that the number of hacks is actually going down over time, and it will continue to trend that way. But we refuse to be one of those victims. We take security seriously, and we'll just scale the paranoia, healthy paranoia, as we scale the users and the liquidity on the platform.
Yes, indeed. Yes, indeed. Thank you, Fran. Shifting gears for a second, there's still various central banks around the world working on their own, central bank digital currency pilot program. Some banks are closer to implementation than others, but it seems like as everything goes digital, digital money, of course, will happen. Now we have decentralized digital money, but yes, central bank digital currencies are on the way. How do you see kind of, decentralized finance, particularly something like Stabull, which kind of specializes in stable coins? How do you see them as kind of operating in a world where CBDCs slowly start to roll out?
Yeah. So as you know, I have a lot of experience in stablecoins and CBDCs. Having actually sat on one of the advisory panels in New Zealand Reserve Bank and all the rest. The world is sort of heating up in the competition, if you will, between centralization and decentralization. I think the war has already been won, and the public just needs to go through the back and forth machinations between, the attempted rollout of CBDCs and the public backlash that inevitably unfolds. Some places might adopt it, but so far attempts out of Japan and Nigeria have been just an unmitigated disaster that they had to cancel and undo. However, we have had already people approach us and say, hey, what if we provide you a wrapped CBDC to pair against USD on your platform? And our answer is always, well, we're infrastructure. We're trending towards decentralization. If you bring liquidity, we're not going to judge what the winners are in the market. We will do due diligence checks to make sure that the issuer itself is legitimate and they have good back office processes, licenses, compliance, etc., so that we're not dealing with somebody that is taking money in but isn't actually buying the underlying. This has to be one-to-one reserves, right? That's kind of a market positioning. We will load whatever people bring liquidity to and let the market decide in the long term what the winners are, so long as there's a legitimate attempts in terms of the pools that we offer.
Yeah, very good. All right. Well, look, Fran, as we start to finish up this part of the podcast, anything else that we need to know in terms of what is happening with Stabull Finance? You said earlier, you had some plans in place, effectively described as how we become unstoppable. So I'd love to hear just a little bit more context around that. Any other partnerships that you can kind of tease at, and just the rollout of some of these features, and of course the pre-sale again.
Yeah, well, look, I mean, we're effectively feature complete right now. What really completes V1, if you will, is the launch of the secondary market for a governance token, the TGE, the public sale, and all the activity that goes around that. So next Monday is the pre-sale on Gem Pads. Check that out, link below, and that's the last allocation to further decentralize who's backing us, so to speak. And then we've got the public sale coming up in 6 weeks, 8 weeks, something like that. And then in early quarter two next year, we'll have the voting portal where people can write proposals and say, I think insurance pool should be 10%, not 5%. Or I think that the JPY USD pool should be, a higher interest rates to stake there instead of another pool. So that creates healthy competition and demand for a voting power for our token over time, a governance token. Yeah, it's a pretty straightforward project. We're surprised no one's built something like this. We've sort of distilled our experience consulting on 30 plus major projects over the last 8 years into creating the best dynamics and game theory possible. And we're just really excited to offer something that, can just scale and scale and scale, and doesn't need hundreds of staff and support and everything else, and is mostly controlled and governed and owned by the users themselves. And I think the world needs it, right?
Very much so. And just shout out the website, Fran. Link, of course, is in the show notes. But Fran, the website is Stabull.finance. And Stable's, of course, a play on words. Stabull.finance. Yes, indeed. Thank you, Fran. Stabull.finance, as I said in the show notes, or just, Stabull.finance. I've also put a link in the show notes to the Stabull Presale, which is on Gempad. So that pre-sale begins very soon, just a matter of days away. In fact, about 4 days away. So link is in the show notes. And I suppose we reach the end of the show. So thank you, team, for listening. Thank you very much to Fran for coming and spending some time today with us to tell us all about Stabull Finance and that Stabull pre-sale. All right, folks, this was the Crypto Conversation for Brave New Coin. See you next time, and bye for now.